Good evening. It's Vijay here. Sunday evening, 10th November 2024. Today's topic is the Indian economy slowing down? The way the markets are behaving, I think everyone connected to the market believes that the Indian economy is slowing down. But the authorities like RBI and the finance ministry do not think so. Now, who is right and who is wrong? In my opinion, both of them are half right and half wrong. Why is it so? Let's take from the markets. If you look at the markets have been steadily going down as far as the Nifty and the Bank Nifty is concerned. We are, I think, down about close to 9% on the Nifty and similar numbers by in on Bank Nifty. But just look at what's happening in the so-called in the broader market. In the broader market, small cap and micro cap are down by about 5 to 6%. Now, if you ask any market commentator, all they would say is that valuations are rich and therefore the markets are coming down, especially with the FIIs selling left, right, center. Now, if you examine little deeply into it, where are the valuations rich? Actually, the valuations are very rich in the small cap, mid cap, and the micro cap. But strangely, they have not fallen as much as Nifty and Bank Nifty, where the valuations are not that rich at all. If you look at traditionally, high valuations will mean Nifty being trading about 25 PE, says 26, 27. In fact, in 2021, when the market peaked out in October, the Nifty PE was about 28 and odd. So we are far away from that, around 23. So in terms of valuations, if you really look at it, Indian markets are not really richly valued. Even in Nifty, 35% of Nifty is consisting of the financial sector, and financial sector valuations, if you take the PE ratio, is at 14.1. 14.1 PE for the financial sector is the lowest in the last decade. We are talking of from 2014, when the index was around 7,000. From 7,000, we have reached 24,000, and the valuations are lower than what they were in June, July of 2014. So the valuations are not rich. What is happening is basically the liquidity is drying as far as the FIIs are concerned. That's point number one. Point number two is at the micro level, the results are not good. If you look at the FMCG sector, they have been hurt very badly. If you look at a cement sector, if you look at any infrastructure sector, so by and large, or even if you look at even a company like Reliance, so all of them have reported poor results. So therefore, the people believe, the market men believe that the micros will affect the macros sooner or later. So therefore, they believe that Indian economy will go under or will not grow as fast as what people think, and therefore the stock market will continue to come down, and therefore FIIs will not come into the market. But if you look at from the policymakers like RBI chairman, head of RBI, he was very the governor of RBI. He was very bullish on the Indian economy, talking of a 7% growth in GDP, when most strategists, including the global strategists, talk of a GDP growth of about 6.5, 6.7, but not 7. But he is very confident. He says in 2021, when everybody was expecting a lower GDP, we expected a higher GDP, and we finally got it. So we will get it. So they are looking at something, the macro indicators. Now look at the Ministry of Finance. Ministry of Finance is very happy with the tax rates, with the amount of tax which is coming in, with the amount of GST which is coming in. And if you look at fiscal deficit is well contained. If you look at monsoons have been very good. So if they look at the macro indicators, they look as if that nothing is wrong. But the problem lies somewhere in between. If the macroeconomic indicators don't drop off the cliff suddenly, but the policies, if they continue to be where they are, sooner or later, the macroeconomic indicators also will drop like the stock markets. However, I believe that both RBI and Ministry of Finance, for whatever their ostrich attitude is seen in the past, are beginning to realize, because the best way to realize for them is to see where the markets are going. People may not like it. People may still say, no, macro indicators are good. But the markets always give them a lesson. So the lesson from the markets is, if you do not change your policies, then the micros, that is the tail, will wag the dog. Normally, the dog, which is the macroeconomic indicators, should wag the tail, which is the equity markets. But here, the equity markets are sending out a clear message, for whatever reasons, that the micro indicators are poor, urban consumption is under stress, and corporate results are more than 50% of the corporate results are not have not met expectations. Now, the other way of looking at it is at least 50% have met them. Now, where are that other 50% which is done well? They are in the financial sector. Financial sector, which was supposed to be not doing well, has done well. So that is the only saving grace in the market. Otherwise, if you look at any sector, of course, pharma is another sector, but pharma is more, I would say, focused outside India. Indian pharma is doing okay, but stocks which are, or companies which are doing well, are invariably people who are into exports. Then there is IT, where it is living more on hope than on substance. People believe that US economy will do well, and therefore Indian IT will continue to do well. So if you take financial sector, pharma, and IT, if you take these three out of the equation, most, if not all stocks, all companies have not performed as much or as good as they were expected to. Now, you may complain about expectations, but by and large, they have not done well. So, therefore, I believe strongly that the message of the market will reach the finance ministry, it will reach the RBI. It is just a matter of time before they fine tune their policies. I believe that this week, the following week, where things are not looking good as we get into the week, I think the market will teach them a lesson further, which means that the Nifty, Bank Nifty may still be under pressure, but they have no reason to be under pressure, especially Bank Nifty. But nevertheless, the Nifty also may be under pressure, especially with stocks like Asian Paints or consumer goods stocks like FMCG, ITC, HUL may be under pressure. But there could be some stock like Reliance, which may bounce back, or some in pharma are likely to bounce back, some in IT are likely to bounce back. So it will be a tricky market next week, but it will shake the confidence, I think so, or more than confidence, I would say arrogance of the powers that be, that everything is hunky-dory. Everything is not hunky-dory. It's not bad. Things are okay, but things could get worse if they continue this with these policies. I believe that they may not continue with these policies. They will fine-tune as we go along, with the macro indicators also showing a little bit of dip. For instance, RBI governor has already warned us that the inflation numbers, which is going to come this week, will be higher than the previous month. So to that extent, the market has already discounted that number, but which should now make the finance ministry get up and perform. Finance ministry has got huge amount of money. As I keep mentioning, it is not that there is no money with the government. The government is earning, and they have put in about 11,000 crores for the 11,000 crores they've allocated to infrastructure, and out of that only about 30% has been used, and we are already just 5 months left for the financial year to end. So if they do it, and I think they will do it, then I think things will come to even keel. Till that time, there will be some pressure on the market, but I am very positive, as I've been very positive, because I believe that sooner or later things will only get better, because there is money. If there is no money in the market, with no money in the government, obviously then one should have changed their opinion, and then one should have been bearish, and then one would have gone short of the market. I don't believe that the time has come to do that. On the other hand, time for bargains has come. So I am, as usual, positive, and I'm looking forward to the next week. Though the markets may struggle, but I think by the end of next week, things should be better than what they begin with. Thank you for joining me. My name is Vijay. I'm not a SEBI registered advisor. If you find whatever I've said is useful, please kindly like, share, and subscribe. Kindly pass the good word around, and that will help me to do better as we go along. Thank you for joining me tonight.